Hi, I'm Jimmy. In this video, we're looking at Macy's, ticker symbol M. Now, Macy's stock has really been beaten down recently, down more than 50% over the past year. And that's accounting for their very impressive dividend yield of right around 10%. So, why did Macy's stock fall? How much do we think it's worth now? And do we think it's a good buy at this point? Okay, so let's take a peek. So we'll start by looking quickly at some of their numbers. And then we're looking at one of the keys to an investment in Macy's and what it could mean for us if we do decide to invest. Okay, so let's start with Macy's revenue. This is Macy's revenue going back to 2013. And as we can see, it's been declining, and analysts seem to think that it will continue to decline for at least the next couple of years. Those are the green bars. Those are analyst estimates. And then when we jump over to earnings per share, well, here we can see a somewhat similar story. Now, we may notice the jump in 2018, and that jump is a little bit unusual because taxes helped boost their profits that year, and so did the sale of some of their real estate assets. And this is actually quite important, and we're going to come back to this in a minute. But for now, I thought it was important for us to just see where Macy's earnings per share really stand, and analysts seem to be expecting that earnings per share is going to continue to decline at least slightly over the next couple of years. Okay, now let's get to the heart of Macy's business. So this is a chart of Macy's store count. The blue lines are the classic Macy's department stores. The red lines are their cosmetics company that's called Blue Mercury. I believe they bought them in 2014. And the smaller green bars, well, those are the Bloomingdale's outlets. They also have traditional Bloomingdale's stores, but the store count hasn't changed all that much, so I kept it off this chart to keep it from getting too crowded. Now, let's add some numbers so we can see how these get a clearer look at what's happening here. So as we can see, the department store numbers have gradually declined. Now, I don't think this is strictly a bad thing. If Macy's is closing their underperforming stores and keeping their best performers, well, in theory, once this is all shaken out, well, Macy's investors could be served quite well for this shift. Okay, now this is where things get interesting. So as of the end of 2019, this is Macy's stores broken down by ownership. And as we can see, Macy's leases a decent number of stores. They have ground leases of a bit more than 100 or so stores. And then they partly own a couple different stores. And then that brings us to a huge part of Macy's business, and that is the stores that they own. So Macy's owns some amazing real estate properties. Many of their stores are larger than 100,000 square feet, and I could imagine these properties are worth a decent amount of money. Now, it's also important for us to realize that as Macy's has closed some of their stores, well, they've also been selling some of the real estate tied to those stores in an effort to raise some capital to revamp their business. This is a chart of the number of owned properties that Macy's had since 2010. And as we can see, the number has been gradually declining, just like the number of Macy's stores that they manage. And I suppose that this makes a lot of sense. And if they close stores and then they sell the properties, well, in theory, the cash that they receive for selling those properties, they could use to pay off debt or acquire new brands or new stores or upgrade current stores. Either way, they get those choices because of the cash that the properties bring in for them. Now, this brings us to coming up with a fair value for Macy's stock. And I'll look at their dividend, and ultimately, does it make sense to invest in Macy's today? So this is the fair value that I came up with using the discounted cash flow valuation. So as we can see, I calculated the fair value of Macy's stock to be about $15 per share. And right now, Macy's stock is trading at right around $15 per share. So let me just run through this calculation real quick, and then we'll jump into some of the thoughts behind it. So I found analyst projections going out to 2023 for free cash flow. Then we use a required rate of return of 9%. Now that's a bit higher than I normally like to use, but we saw their revenue, we saw their profits, those numbers are falling. So I think Macy's stock, there's a little more risk in it. So for me, it makes sense to require a higher rate of return. Then I used our standard 2.5% for perpetual growth rate. And then we added another piece here that we don't always use. And I think it's important in this case, but I'll explain why in a second. So basically, we took today's value and then we subtracted net debt. Net debt is the same as offsetting, let's say, long-term debt and cash, offset them, you end up with net debt. Well, we took the result of that, divided by the shares outstanding, we end up with a fair value of about $15.21. Now, if you're wondering how we did this whole calculation, I did a video on that specific thing, and I also have a link to this very template I'll email you the Excel spreadsheet. There's a link in the description below. Go to that link, plug in your email address. I'll send you over the template as soon as I can. Okay, so in the template, and most of the time that I do DCF, I don't subtract net debt. Now, if we don't subtract net debt, then in theory, what we end up with is the fair value for the entire company. If we do subtract net debt, then we end up with the fair value of just the equity, which is the same thing as stock. So when considering our discounted cash flow valuation technique, what does this really tell us? Well, it should tell us how much future projected free cash flow is worth today. And since free cash flow is calculated by, in theory, looking at the cash generated from the operations of the business, well, in theory, that would mean that discounted cash flow should tell us the value of the operations of the business. As an example for Macy's, well, we know that Macy's owns about half of the properties that they use for their stores. Well, what if they didn't own any of the properties and instead they leased all of their properties? Well, assuming rent was somewhere equivalent to what the mortgage cost is, then free cash flow wouldn't change all that much. So this $15.21 of fair value, well, it would be about the same. Again, assuming the expenses were about the same, since this free cash flow is generated from the operations of the business, not whether or not they own the properties. But I've got an interesting scenario for us to consider. What if Macy's decided to spin off the ownership of the real estate into a real estate investment trust, or REIT for short? I've got a link to a REIT primer video if you're not sure what a REIT is. But if they decided to do that, let's imagine that we are Macy's stock investors and we get to keep our shares in the Macy's stock as it currently stands, but we also get shares in the new REIT that is formed. Well, what do we think would happen to Macy's stock price? Well, it would probably fall, but assuming that their free cash flow turns out to be somewhere in line with what we're saying, eventually profits are going to stabilize, assuming that the company can turn around the business itself, the operational business. Well, things would eventually stabilize, and let's pretend that the stock is worth somewhere near $15 per share, or even if it was a few dollars below that. But what about the REIT? Well, the REIT alone is probably worth as much as Macy's stock is right now. They have a ton of properties. Their largest property, their flagship store in New York City, is an entire New York City block. It's estimated to be worth somewhere over $3 billion, I've read. Plus, they have another 350 or so other large properties scattered throughout the country. Now, I'm not actually proposing that Macy's do this, although I do think it would make for a very interesting twist. But I do think that Macy's real estate, the real estate that they own, offers a somewhat of a floor under their stock price. And I think this could be reassuring for investors, specifically investors that are looking for Macy's impressive dividend. This is their dividend history going back to 2014. And I checked it over the past 12 months. And over the past 12 months, they have a dividend coverage ratio of more than 2, which tells us that Macy's currently has more than double the profits they need to maintain this current level of dividend, which is about $1.51. And given their $15 or so price currently, well, that would mean that their dividend yield is right around 10%. Now, if we do get involved in Macy's stock, I think we need to do so cautiously. There could be some volatility, even though they have a great dividend, but I do fear that if they keep selling off their real estate to fund the company turnaround, what if the turnaround doesn't come anytime soon? So in theory, they could be selling away that floor we mentioned just for no real good reason and sort of be giving up the profits of the company. But over the long run, I don't expect that to happen. I expect them to maintain the best performing stores and the real estate underneath it if they already own it. Then on the flip side, management has talked about the possibility of building a skyscraper on top of the flagship store in New York City, which should help them generate even more profits and could be a great thing in the long run. Now, it also gives the idea of a REIT spinoff a bit more credibility. But what do you think? Do you think that Macy's is worth investing in at the current level? Does the dividend make it interesting enough to get involved? What do you think of the REIT spinoff idea or some version of that? I think that could be interesting. Let me know what you think in the comments below. If you haven't done so yet, please hit the subscribe button, hit the thumbs up. It really helps the videos and the channel. And thank you for sticking with me all the way to the end of the video. I'll see you in the next video. Thanks.